Hello, everybody. Uh, if you're wondering what are the new changes to the mortgages and mortgage criteria in the Canadian banking system and how it's gonna affect you from buying a new home, I'm here to tell you about it. On Tuesday, OFSI, which is the Office of Superintendent of Financial Institutions, so it's OSFI, he proposed new it's a proposal, by the way. It has not been implemented, but a new change in structure. So everybody knows about the stress test. Stress test is a particular level you need to be at to qualify for a mortgage. So for example, uh, if the interest rates go up in a particular market, the previous is stress level was 4.79%. So you had to qualify for 4.79%. You didn't have to pay at 4.79%. Right now, the best one I heard was 1.25%. So you can qualify for 1.25, but you need to qualify for 4.79% if you're buying an uninsured mortgage. Uninsured mortgage means you're paying above 20%. So if you are buying a house and paying about 20% and not buying insurance with it, then you need to qualify for 5.25% instead of 4.79%, which was the previous year's stress level. So this is a proposal which they would be implementing from 1st of June. So what does that mean to you? First of all, why they have done it? They've done it to put some brakes on the rise of the real estate market. The prices are going up crazy. So what they feel that this is going to bring a stop to the prices, like the stress test did in 2018. It was proposed in end of 2017, um, and it did change it to some level. Um, but what I feel is from today till 1st of June, everybody's gonna rush and buy a house. They're gonna feel that they're gonna miss out on this opportunity on qualifying. So, for example, if you were it is from 4.79 to 5.25, it is roughly 0.46% difference. So 0.46%, if you're buying $1 million, you're qualified for $1 million mortgage. Now you'll be qualified for 0.46% less, that is 954,000, right? So you won't be able to buy $1 million house. You buy a $954,000, and that's a mortgage, sorry. So similarly, everybody would be rushing it till 1st of June to get a house for themselves, else, and that is going to increase prices, because now for every property you'll see more offers, more buyers jumping in, and there the prices which had increased 17% in the last 12 months. That's an average, by the way. Like in the last 3 months, I've seen all the houses, it's freehold house going above 100,000 at least in my neighborhood and everywhere in GTA. So that's where technically I feel the price, it's going to push the prices, and it is going to put a break for a while. I think in the month of June, it's not going to be that many sales, but when it comes to July, August, before opening the school, it's going to go back to normal, because people are going to keep on buying. The interest rates are not going up. They're not going to buy $1 million house, they're going to buy a $955,000 house. Not much of a difference. Uninsured first time home buyers who are paying less than 20%, they save like 5-10% for the house. This rule does not affect them or you guys. If you're paying under 20%, don't worry about it. Don't watch this video. It's for those who are paying above 20%, right? The federal government and is in charge of the ones who are paying less than 20% because they are insured. They have to buy an insurance. The uninsured ones, that is what the OSFI is concerned about. So that's why they think that this is going to reduce the prices. I think it's it's like a freight train coming at you, and this is these brakes are not big enough to stop them and turn them around. This is gonna be something else, or this is going to go keep on going up and up for a while now. So I don't see the market going down in any way, or this won't affect the market for a couple of years, as long as the interest rates are down, and I see them going down further. With these stress tests coming in, I think we're gonna see mortgages being approved at 1%, and people are gonna buy for the ones. And again, because people think the stress level, the banks are it's gonna affect. Banks are gonna feel more safer now. If one benefit comes from it, they're gonna feel much safer lending, because one has to qualify at 5.25%, right? 5.25% has not been existing since the last 5 years, I think. So at 5.25%, and banks are gonna feel much safer lending it to people. So they're gonna compete at interest rates. One bank is gonna 1.25 right now. Some I heard one bank, HSBC, offering at 0.99% to very small percentage of buyers under 500,000 making $1 million a month. I don't know what the criteria was, but again, it is in the picture. People are gonna get it mortgage at 1%. That's what I feel. Later down the line, and just to buy a bigger house, people are moving to the suburbs and moving out of the city and out of the condos to townhouses, and this is gonna continue growing. In people, yes, people are getting vaccinated. Everything is coming back to normal, but that's totally another video to talk about. But with these mortgage age changes and changes in the stress level, it is definitely not going to stop the market, but it's going to affect at your highest budget. That's what's going to affect. If you are being approved, you're making good income, and you're being approved for $1 million, you don't have to buy a house for $1 million. You buy a house for $900,000. It's the same thing, right? So uh, again, it's for those who are stacking up, being investors. It's gonna affect them, not go crazy, but little less crazier, and that's what it is all about. So that's just where I'm gonna end this video. Everybody have a good day. Don't worry about these mortgages. Stress. Real estate is the best investment strategy. The best time to buy was 2 years ago. Oh, the worst time to buy is a year from now. So the second best time to buy is right now. So keep on buying houses, investing, invest in the right market. Don't worry. It's not about if the prices will go up for a property or not. It is when the prices will go up. So keep investing in real estate. It's the best form of investment. Have a good day.